Look at the global forex market on any given day, and you are mostly seeing a high-speed collision of numbers. To the untrained eye, the sheer volume and volatility look like pure, unpredictable chaos. Trading this environment on instinct forces a reliance on emotional triggers. Without a framework, every sudden dip feels catastrophic, while every spike prompts a panicked, uncalculated entry. But suppose that turbulence has a structure, a hidden, repetitive rhythm driven by collective human psychology. When millions of traders experience greed, fear, or the urge to take profits, they move in herds. Those mass behaviors leave a consistent, readable imprint on the price charts, a kind of behavioral DNA. Learning to identify this blueprint allows a trader to look past the immediate market noise and locate specific structural turning points. The foundational framework used to decode the psychology into readable phases is called Elliott Wave theory. This impulse phase plots 5 distinct waves driving a trend. Waves 1, 3, and 5 push upward, 2 and 4 correct downward. Then a 3-step ABC corrective phase completes the cycle. Crucially, this structure is fractal. Inside the first wave nests a miniature 5-wave sequence. Understanding this overarching map gives you your exact coordinates. You know where you are within a trend's life cycle, which helps stabilize your decision-making during a sudden temporary price drop. Drawing shapes on a chart can quickly become a subjective exercise. To turn this art into objective science, Elliott Wave theory relies on strict boundary rules. Rule 1 states a downward Wave 2 pullback can never erase 100% of Wave 1. Rule 2 dictates Wave 4 cannot overlap the price territory of Wave 1. Finally, Rule 3 insists Wave 3 can never be the shortest impulse wave. These rules act as an objective shield. If a setup violates even one of them, the structure is false, forcing you to abandon the hypothesis before any capital is risked. But a valid geometric shape is only the first step. You must also measure the underlying market strength using a secondary filter, momentum indicators, like the MACD. During a Wave 3 breakout, market strength should align vertically with the absolute highest peak of the momentum histogram below. Later, price pushes higher to form Wave 5, but the MACD registers a noticeably lower, weaker peak. This is bearish divergence. Combining price geometry with momentum data reveals the truth, whether a market is genuinely breaking out or quietly running out of steam. To turn these observations into a tactical trading plan, we apply Fibonacci mathematics to project precise numerical targets. This chart overlays a Fibonacci retracement grid onto Wave 1. Here, price bounces perfectly off the 61.8% level. Once confirmed, we apply Fibonacci extensions, establishing an exact target at the 1.618 level for the explosive Wave 3 to hit. By layering this mathematical filter over the psychological patterns, Elliott Wave theory transitions from an observation tool into a tactical blueprint for entry and exit. When you lock all of these filters together, you arrive at the mechanics of the classic entry setup. This interface shows the ideal sequence. You identify a valid Wave 1, wait for the Fibonacci retracement to find support, and execute your trade at the start of Wave 3, targeting the extension level above. The institutional value of this theory centers on how it defines risk. Most systems guess where to place a stop loss. This framework calculates it based on structural failure. Because of the cardinal rules, you have an exact mathematical location for a stop loss order. You place it right below the origin point of Wave 1. If the price hits that line, the pattern is logically dead, and you exit the trade. While no system predicts the future with certainty, this framework ensures you only commit capital to high-probability setups with strictly defined mathematical risk. The global forex market becomes manageable when viewed through the combined lens of wave structures, strict validation rules, and precise Fibonacci targets. Executing this strategy effectively requires a platform with the speed and professional tools to match your analysis. Open an FXNX account today. With 0.0 pip spreads and advanced charting, you can start trading your verified wave setups with